Yeah, so this is a disclaimer. I am not a financial advisor. Everything I say here is just for fun. You are advised to do your own research if you want to invest in crypto. I hope we all understand. Yeah, yeah. So if you want to invest in crypto, you do your own research. Make sure you have enough information about the project you want to invest in before you commit yourself to it. Okay, so I will begin with some slangs in crypto, since this is a beginner presentation for investors. You need to get to know some of these slangs that we have in crypto. When you go into the crypto industry, these slangs are used often. Like hodl means you should hold on for your dear life. That is, if you buy a crypto or if you invest in a project and the market begins to go down, if you are a believer of the project, you are advised to hold on for your dear life and not sell. FOMO, fear of missing out. Sometimes you'll be hearing about some projects and the market will be pumping very high, and then you feel like, oh, if I should buy into this thing, if I don't buy into it, I might lose. So out of this fear, you make that decision to buy into the project, and for some reason that project may not continue to go up, so you may end up losing your money or have a bunch of coins with no use. We have bull market and then bear market. So the bull market is when everything is green, so green. So some people understand what I mean. So like every project is, rising and pumping, and there is a lot of excitement in this cycle. And then we have the bear market. And in this market, like most of the projects are going to drop. They will fall at least 50 to 80%. So that is the bear market. And this market usually lasts like 2 to 3 years. And the bull market, we have usually like every 4 years we have a bull market. But this year seems to be a different year, but that is the cycle. And then we have the FUD, fear, uncertainty, and doubt. When you go into crypto, there is fear, there is uncertainty, and there are doubts. Is this project good? Will this project last? Should I buy into it? Should I not buy into it? Should I sell now or should I hold on to it? So there is this uncertainty. And then there is dip. We have dip. Price of coin drops drastically. Not necessarily drastically, but it drops. So when there is a dip, you see the market shows red. That means the price of the coin you are holding or others are dropping. And then we have whales. So these are persons with huge amount of money ready to get into any project. And sometimes they can manipulate the market, because when they buy huge sums of a particular project, it shoots up. And then everybody, that's where the FOMO comes in. So people see it, oh, this is rising. And then if you let that FOMO catches you, you go into that project and then you buy. And then the whale will suddenly sell everything with his profit or her profit. And then the price comes down. We have pump and dump. So yeah, this is where when the whales buy the coins, it starts to shoot up. It pumps and pumps and pumps, and then the whale sells the coin and it dumps. So, and then we have BTFD, buy the fucking dip. So when the price of the coin you are holding is dropping, they say buy the fucking dip. So you buy the dip, and then you end up with more coins. And if the price goes up, you benefit more because you bought when the price went down. There is moon, that is bullish movement of a coin. So when the coin is rising, we say the coin is going to moon. Or when there is a sign that the coin is going to shoot up, we say the coin is going to moon. We have weak hands. We have weak hands. So those with weak hands, they sell at a loss when the market is down. So assuming you buy a coin at $1 and then you see the coin dropping, the market dropping to like 50 cents, 40 cents, and then you fear. With this fear, you sell at a loss. So we say you have a weak hand. And the diamond hand is the opposite of the weak hand. So even when the coin is dropping, you still hold on because you believe in the project. So you have to believe, pretend as if you believe. And then you hold on to it, and we say you have a diamond hand. So when the price comes back up, you enjoy. And one of the biggest risks in the crypto industry is rug pull. So when there is a project and the developers decide to abandon the project, usually like they launch the project and people start to buy in, and within a month or 2 or 6 months, they just pull the plug and they run away with investors' money. So when the developers shut the project down, you still have the coin, but you can't sell it. So this is one of the biggest risks in the crypto industry. Okay, so coin or token. So these are sometimes confusing in the crypto industry. We have coin and we have token, even though nowadays like people use it interchangeably, and it's not really necessary. Coin, token, but as a beginner, you should know the difference. So the coin operates on its own blockchain, like its network, and these ones are difficult to develop. So like Bitcoin blockchain, Ethereum blockchain, Binance Smart Chain, Avalanche. There are a lot of these networks. So these ones are like the main layer 1 network where software, other applications run on these networks. And then there is the token. So if the application is running on a network, we call it a token. So like Meta Hero, this project is running on Binance network. Uniswap runs on Ethereum. Keen runs on Solana, and then PancakeSwap is also on Binance chain. But yeah, you can call a token a coin, and you can call a coin a token. But I mean, it's worth to know the difference. Coin types, yeah, there are a lot of types and categories of coins. So as a beginner, you should know the types. So we have a use case coin. So these coins are like real projects and trying to solve a real problem. So like BitTorrent, I suppose most of us know what BitTorrent is. Like people download movies online, and they also have a project where people can buy cloud storage, and this storage is saved on other people's computers. So anybody can give up some space on their hard drive to be used as storage. So that is what BitTorrent is trying to do. So it's not like a centralized server like Google, owned by Google, like they have this huge data centers where the data is stored, but this one is distributed across like different networks. And we have stable coins. So these coins, they do not go up and they do not come down. So it's like $1. One stable coin is $1. $2, two stable coin. So they don't go up and they don't come down. And these coins are very important as a beginner to crypto. You should know these coins. You will need them. And then we have meme coins. So these are shit coins. These coins, they are not trying to solve any problem. They are driven by community force. Like you have about 20,000 people talking about this coin. Oh, this coin is good. It's going to moon. And then people start to buy in. So example is like Dogecoin. It was developed as a joke. Then the community adopted it and it became huge. And there are nowadays over 1,000 shitcoins, and every day there are new coins popping up. So you should be careful and do your own research once again before you invest in a project. Coin markets. So as a beginner, you should take note of these features. We have the market cap, total supply, max supply, circulating supply. So when a project comes up, they set how much or how many coins they intend to sell or distribute, and that is the max supply. So a project can have like 10 billion coins, 1 trillion coins, 100 quadrillion coins. Example with the shit coins, the meme coins, most probably or most often they come up with huge amount of supply, like more than 1 trillion supply. So, and then the total supply is the amount of coin that have been already created minus any coin that have been burned. So when we say a coin has been burned, it means they are taken out of circulation. So when the project launches with, let's say, 10 billion coins, they take 50% out of circulation. So they end up with the rest of the coin as total supply. The market capitalization is you calculate the circulating supply with the market price. So you should take note of this. If a coin has, let's say, 100 trillion, that coin is not likely to hit $1 anytime soon. So you should take note of this before you buy into projects with huge amount of supply. If you are expecting to buy like 100,000 of that coin and you expect it to get to $1 so you can have $100,000, you should stop dreaming, because that would take a long time to get there if the total supply is very huge. And then the circulating supply is the amount of coins that are in public hands, like people own these coins. Yeah, so I talked about the blockchains. So we have a lot of networks, which also is called the blockchains. So Binance Smart Chain is the third most popular network with cheap fees. Ethereum, the most popular one, has expensive transaction fees. And then we have Solana, which is one of the fastest networks. And then Nevos network. Over here, let me explain a little bit. So there are different networks, and the project you buy may be developed on the Binance Smart Chain. So that means when you are buying the coin, example from PancakeSwap, you pay the fees in Binance Smart Chain. So Binance Smart Chain, their coin is BNB. So if you are using PancakeSwap, PancakeSwap is a decentralized application where you can swap coins or buy coins. So when you buy from there, you pay the fees like in BNB. And if the application that you are buying, if you are using something like a decentralized application to buy the coin, and if it is on Ethereum, you'll be paying high transaction fees. So before you invest in a coin, you should know what kind of network it is hosted on. And if that coin is not available on an exchange, you should be ready to pay high fee if it is on Ethereum. And Nevos network, so this network is trying to combine or build an interoperability between the networks. So if there's a coin on Binance and you have let's say some Ethereum that you want to use to pay for transaction fee on Binance, then you can switch or swap easily. It's going to be possible to swap easily. So that's the problem they are trying to solve. So before you invest, you should have a target. So you can set at least 3 targets: minimum target, medium, and then maximum target. So if you want to be a millionaire, that should be your maximum target. After that, the medium target can be something like you want to make enough to buy a house or a car. That should be your medium target. And then the minimum target is, let's say if you invest 5,000, you can target like, okay, minimum 10,000, I should make a profit on this 5,000 that I'm investing. So that should be your minimum target. You should also have an Excel sheet to record any amount that you invest in crypto. So if you put in $100, you write a date, what kind of project you bought, and then if you happen to make any profit in crypto or you want to cash out, you should also make a note how much you took out of crypto. So this will help you to track your expenses and your investment. And then there is a Delta app. This app also helps you to make record of when you bought the coin, at what price you bought the coin, and how the coin is doing. If you are making profit, you will see it in the app. If you are losing or the coin is going down, it will show you how much money you are losing. Nuisance bills. So yes, this is very important before you invest. You should get rid of all or at least minor bills, because if you have a minor bill and you invest in a coin and the market begins to go down, this might cause you fear and you make a bad decision. If you have like a bill and your mind will be telling you, oh, I have a bill, why did I put $100 in this and it's going down? I could have even paid my bill with this $100. And then you end up selling the coin at a loss because you have a bill to pay. So before you invest, you should try to get rid of all these things first, and then you have a clear mind to go into crypto, so you can buy and then have a diamond hand to hold on to it, because the crypto market is very volatile. It goes up and it comes down, and whatever goes up surely must come down, and whatever comes down can go up. So you take note of this. And then a budget. You should not invest your life savings into crypto. It's very dangerous. Never invest your life saving in crypto. It's dangerous. Unless you can handle the emotions that come with it. But it's not advisable to do that. So make a budget. You have 1,000. You can budget 200 to invest in crypto. So yeah, and you should always invest what you can afford to lose. If you if you can't afford to lose 1,000, don't put it into crypto, because if the price goes down, you will have emotional trauma. So keep that in mind before you invest. So how to invest? There are many ways to invest in crypto, and these are some of the few I decided to put here. So you can buy and hold. Example, if you have $1,000 to invest in crypto, you can decide to research about project, and if that project is good for you, you can buy and then you hold on to it. So you can decide to buy and then hold it for like 3 years, 5 years, and then you see how it goes. And before you do this step, you should make sure you are buying into a project that can last more than the 2 years you are hoping to hold it for. If you buy a shitcoin and you are hoping to hold it for 3 years, it's not going to work out well for you. So another step that you can also use is the dollar cost averaging. So with this step, you will project to buy about $10 worth of the project every week. It doesn't matter if the market is up or the market is down. So you can set, assuming Mondays, I will buy $10 worth of pancake swap, or $10 worth of Bitcoin, $10 worth of Ethereum, whichever coin you want to buy. So you set your target. There are crypto exchange and apps that can let you do this, and then you just forget about it. You set it up and forget, and every Monday it will buy $10 worth of that coin for you for, I don't know, 6 months, 1 year, 3 years, how long you want to do it. Day trade. So day trade, you can buy the crypto. You need to study the market very well. So you buy it low and then you sell it when the market goes up. So there are people who are doing this for a living. They study the market and then they buy it low and sell it high. And then you can also invest in mining. You buy mining equipment, you set it up, and then you reap the reward from mining. So mining, proof of work. So this requires hardware. So you need to buy a computer and then graphic cards. And then you set it up, and you can decide to upgrade as time goes, or you can start like minimum or initial investment of $1,000. You buy a computer for $200 or even less, and then you buy a graphic card for $300, $500. It depends on, there are a lot of different types of graphic cards with different power. So the reward you get depends on the hash rate or the power of the graphic card and the market price of the coin you are mining. So you can mine Bitcoin, you can mine Ethereum, and there are other hundreds of coins that you can mine. But at the moment, the most profitable ones are Bitcoin and Ethereum. but it's difficult to mine Bitcoin now because it requires huge power and powerful device to mine. So the option for beginners will be to mine Ethereum and other minor coins. There is also staking. This is also a form of mining, but with this one, you don't need equipment. You only need your cash, your money, and then you put it into staking. So the POS means proof of stake. So the mining with the gadgets and equipment uses proof of work system, and the staking without equipment uses proof of stake. So there are a lot of platforms where you can stake. So you buy the coin and then you put it into staking and you get rewards daily. So example with PancakeSwap, the reward you can get ranges from 50% to about 70% if I'm right. And there are some applications that allow you to stake and it compounds automatically for you. So you stake it and you don't worry about anything. At the end of the day, it's going to compound the reward you get that day and then roll over to the next day. And you can decide to stake for as long as you want. So there is ApeSwap, Crypto.com app, and VVS Finance. So you check all these applications and then you decide where you want to stake your $1,000, $200, and you set for how long you want to stake. They have huge percentage rewards. So the advantages and disadvantages of mining and staking. So if you are mining, you have control over your investment because you buy the hardware, you buy the computer, you buy the graphic cards. So there is no risk of rug pull, like the developers shutting the project and then running with your money. Because if you are staking in the app, the developers, there is a risk, especially if it is not genuine project. There is a risk of rug pull. So you get your daily reward in the mining and easy cash out. So if you are using, there is an application, we will talk about it. You can get the mining reward straight to that app, and with your Visa card you can cash it out from the ATM or spend it on anything you want. So the pros about staking, you lock your funds and that fund can increase if the market rises. So assuming you stake $1,000, in about a month or two, that $1,000 can rise to, I don't know, 1,500, 2,000, depending on the market. So that is your initial fund minus the rewards you get from it. You can stop the staking at any time. There is no contract, there is no commitment. So if you stake it today and you get today's reward, you can unstake tomorrow and you keep the reward you got today. You can unstake after a month, you keep the reward, and depending on the market. So the compounding interest, yeah. So if you choose the automatic compounding, then it does that for you automatically. And then there is the manual compounding where you have to manually do it yourself. So you check the app every day, and then whatever reward you got that day, you either unstake it or compound it. The cons about mining, disadvantage, energy cost. It uses electricity, and you need to sell your equipment before you get your investment back. And there is also the possibility of depreciated hardware. So if you buy the hardware for $600, you will not get $600 if you are selling it after a month. And then the transfer fee from mining pools. So there is a company that when you set up your mining, you connect your mining equipment to that company. So you mine with that company, and then the reward is transferred to your wallet. So that transfer fee can also be a problem. But there is other companies that when you mine, like Binance, which I believe we will talk about soon. So if you mine with Binance, they pay you, and then the money stays in your Binance account. And then you can decide to sell it into a stable coin, and then you withdraw it, or however you want it. So the disadvantages of staking, as I said, there is a risk of rug pull, and then the APR and APY can go down if a lot of people are staking in the same application. And then if the market falls, your initial $1,000 can drop to $500, but you haven't lost until you sell. So if you have a diamond hand, you can just hold on to it, let it be. That's why you need to have a target. So with that target, you don't mind if the market goes down or up. You just hold on to it, and you tell yourself to stake for 1 or 2, 3 years. So yeah. So if you want to invest in crypto, here are some tools that you will need. For the beginning, there is crypto.com app. There is Trust Wallet. So you need this wallet to save your cryptos or your coins, whatever coin you buy. You need a wallet to hold on to it. There is Delta app, as I talked in the other slide. It helps you to keep track of your investment, your assets. So any coin that you buy, you can add it into the Delta app, and then when the price is going up, you will see it. When it's coming down, you will see it. It will show when you bought it and at what price you bought it and how much interest you have got on your investment. There is Coinbase app. There is Atomic. Atomic is a wallet. Exodus is also a wallet. And then there is exchange. So these exchanges are where you buy your cryptos. You exchange your dollar for crypto. Some exchange allow you to buy crypto directly with your credit card or Visa card, debit card. So you buy your coin, let's say Ethereum, on an exchange like BINANCE, and then you transfer it to your Trust wallet for safekeeping. Here are some more tools. CoinMarketCap.com. There are a lot of cryptos over there. You can check which coins are on the market. The same applies to CoinGecko. So you check these things, these sites, for which cryptos are launching, which ones have launched newly, which ones are performing well, and which ones are performing bad. So with this tool, you can make a decision which coin to invest in or how your coin is performing. There is MetaMask. This is a Chrome extension. So if you have Google Chrome, you can install this extension as the wallet. There is Binance.com, which is an exchange where you can buy cryptos from. And then we have BITSGAP.com, freecommerce.io. So BITSGAP is an automated application where you can set it up and it will trade cryptos for you. So automatically it buys low and it sells high. It follows the market and it works for you automatically. So you don't have to track the coin yourself. You set it up and then the BITSGAP trading bot will do this magic for you. The same applies to 3Commerce. With 3Commerce, you can also set smart trade. With the smart trade, you can set how much low you want to buy the coin and then how much profit you want to take after you buy. So if you set this thing up and the coin gets as low as your targeted price, then the smart trade will automatically buy the coin. And if the price goes up, assuming you set your profit to 10%, the application will sell your coin for you. One good thing about 3Commerce Smart Trade is that it can also follow the market. So if the coin goes above your set target of, let's say, 10%, the trading bot will follow it. And then if you are lucky, you can get over 10% or 15% more profit from this bot. Now, here is an important part. When you create your wallet with Trust Wallet or crypto.com or any other wallet, you need to keep your private key offline. This is very important. If you keep it on your phone or in Google Drive or any other drive, it is possible that it will get hacked. And if anybody gets hold of your private key, they have access to your wallet. And the sad part is when they enter your wallet, you will not see. So they can monitor your wallet. And if you happen to hit the jackpot, they will just trigger the yeah, they can follow your, especially with Trust Wallet. Yes, they can follow. Or sometimes they will not follow. If you have any coins in there, they will just transfer it from your wallet and you will not see. And you can share, like Trust Wallet, you can share it with your wife. So you and your wife will have access to the wallet and you can both see how it's going. Like Ohema and Ohene, you can both share the wallet, but you have to keep your private key offline. You write it on a piece of paper and then you store it. And as a beginner into crypto, you have to be aware of scams. There are a lot of scammers targeting new investors. They will lure you into giving out your private key. They will tell you, especially when you ask a question in a forum, yes, they will pretend as if they are helping, and they will tell you, oh, you should connect your account to this and that. You should never do that. Don't entertain them. So beware. The private key is your life. Hold on with your dear life. Now, where to buy crypto or where to start? So there is Binance.com. There is a web version and there is a mobile version, but the mobile version is not very friendly for beginners. So you can use the web version. That is a centralized exchange. So this means that if you buy a coin on a Binance, your coin is stored on Binance. So they can put a hold on withdrawal. So that means you can't withdraw the coin. And Binance or any other exchange can also be hacked. So if you store your coins on an exchange, because you don't own the private key, you don't own the coin. That's what they say in the crypto industry. So you have the private key, you have your crypto, it's yours. But if you buy it on a centralized exchange, you don't own it. It's like a bank. You have your money in the bank. When the bank is closed, you can't withdraw your money. So that's how it is. There is COINBASE.com. They also have a web and mobile version. Mobile version is user friendly. That is also a centralized exchange. All of them are safe actually, but of course, you have the private key, you have your coin. And then there is Trust Wallet. This is a mobile app and it's a wallet for saving cryptocurrencies. So if you are one of those people who trust, if you don't have the private key, you don't own the coin, then whenever you buy on an exchange, you can transfer it to your wallet. And when you have your wallet, you have your coin. That is a decentralized place. So you can also swap your coin or sell your coin in that place on the Trust Wallet. And then you can also, usually when new projects are launched, they are not available on exchanges yet, because the exchanges, they have rules and they have um, strict rules that you have to follow before they list your coin for sale. But if you want to get into a project early, which is very important, the early you get into a project, the faster you can get out, or the more you can get, and it's also cheaper because it's not available to everybody. So if you can master the habit of learning how to use Trust Wallet, it will be a big plus for you as a new investor, because you can get into a project early, and before they launch it or it becomes available on an exchange, then the coin will rise rapidly, and then you can sell and you will enjoy your profits. You can stake your coins in Trust Wallet also, and then you can monitor the progress of your staking. Example, PancakeSwap, Uniswap. So they are available in Trust Wallet and you can stake your coins there. There is Crypto.com. They have a mobile app. This is also a mobile app. With Crypto.com, you can get a Visa card for free, debit card. So when you have a crypto in Crypto.com, you can spend your crypto easily with your Visa card. You can also stake your coin in Crypto.com and you get a reward of about 1% to 12%. And they also give cash back on using the Visa card. So depending on the type of card you have, they have different types of card. The first card that you will get is the one that comes with 1% cash back. And they have other cards that have other rewards and benefits, like you get free Spotify and then free Netflix. You also get airport lounge VIP, and then 10% bonus on I think this travel exchange, especially those in arbitrary. You can get cheaper flights from there. Yeah, because you have 10% reward. Yeah. So these are some of the few places that you can start your crypto journey from. Keep track. When you invest in a project, you should follow that project on Twitter or Telegram especially, because sometimes you can buy a coin and you'll be hoping to hold the coin for a long time, but sometimes some of these new projects, they come up with upgrades and migration, and if you are not following these, you might end up losing your investment, because when they make migrate to a new system and you are not aware of it, and you don't migrate the coins that you have, you will end up with a useless coin. So you should follow your investment, keep track. When you buy a coin, you follow that coin on Telegram. At least check the messages, what is going on. But there are, of course, good projects that you don't even need to follow, like Bitcoin. You buy a Bitcoin, you don't need to follow any Telegram page or anything, because it's a good project. And then there is Ethereum and other good projects. But most often the shit coins, they switch a lot because they don't have really good team, and they don't plan well before coming up with those coins. So they sometimes they create the coin as a joke, and then when they realize that a lot of people are getting into the project, before they start to think about, okay, let's change this shitcoin into a use case coin, trying to solve a problem. And then when that happens, then they need to switch um, into a new system, or upgrade into something else, or migrate to something else. So if you buy into this kind of project, then you need to keep track so you can migrate with them. So strategy, you should have, like I discussed in the other slides, at least 3 targets: your minimum, medium, and max. The max is if you want to be a millionaire. Everybody wants to be a millionaire. So that is the prime target, the prime goal. But if you have your minimum and medium, at least it will help you to calm down if the market is dropping. So you should have this strategy. You should also take profit, very important. Sometimes when you buy a coin and the coin starts to shoot up, you might be naive to think that, oh, the coin is hitting $1 very soon. And if you're holding, assuming 100,000 of that coin, you would think, okay, if this coin hits $1, I will have $100,000. So if you fail to take profit, the coin will come down and you end up feeling very sorry for yourself. I have felt this before. I bought into a project, and within 3 months, my initial investment jumped to about almost 40,000, but I failed to take profit because I was still early. I was still new in crypto. So yeah, I was holding actually about 800,000 of that coin. So I was like, okay, $1 soon. And then I failed to take profit, and everything came down. And when it was coming down, I panicked and I sold it cheap. Even though I didn't lose on that investment, but I sold it cheap. So if, assuming you invest like $1,000 in a project, and that $1,000 grows to about $5,000, you should remember to sell $1,000 and then at least hold 30% of that sale into stable coin. Another very important strategy here. That's why you should take profit. If you take profit, at least save 30 or even 50% of that into stable coin. If you do this and the coin drops, you can get back in with your stable coin and you end up having even more coins. So you can use this strategy. And then wise up. Control your emotion. Crypto is very volatile. You can buy $1,000 today and it will be $200 tomorrow. That's why you should not invest with your life savings. And that's why you should that's why you should keep your emotion and make sure you don't have that nuisance bill that I talked about previously. Because if you have this, then your mind will begin to be at war with you. Like, dude, you could have paid your bill with this, and you'll be stressing. So, wise up. Do not get attached to any project. So, sometimes when you research about a project, you feel like, oh, this is a very good project, and it's definitely going to hit $1. And then you might fail to take profit because you are emotionally attached to that project. You believe in that project. Even though, yes, you should believe, but don't get attached to it. You are in for the money. If you put in 1,000, make sure you get 2,000 if the project is growing. So wise up. And then if you want to sign up, you can use my referral links. I will get some rewards, but at no cost to you. At least for my presentation. So if you are willing to start your crypto journey, I can provide you with my referral links, and I can also guide you to create your wallets, create your accounts, and then start. I'll recommend you start with the dollar cost averaging, and you can start crypto investment with $1. You don't need to put in huge amount of money. You can buy $1 worth of crypto every week. But the secret with crypto is that the more you have, the faster you can get out. The more you have, the faster you can get out. So if you buy a coin for like 10,000 worth of that coin with $20, you shouldn't expect that coin to hit $1 soon for you to get $10,000. But if you find a good project and you feel like this is a project that can grow, make sure try as much as possible to get more of that coin. More of that coin. And one thing I didn't talk about is you should also have at least target not more than 10 coins. If you decide to invest in crypto, you should have at least 3 main coins that you should it should be your priority, like your main projects. And then you can have at least 3 shit coins and then some other few other coins. So if you hear about projects and you decide to jump onto every project, you will end up buying small amount of a lot of coins, a lot of projects, which is not a good way of investing. If you find a coin and it is good and it is cheap for you and you can afford it, you should buy, and that is where the market cap comes in. So that is where this market cap and supplies come in. So you need to check how much total supply that coin has, and then do your own calculation. If there is a coin that has a total supply of like 1 trillion, it's not likely that that coin will hit $1 anytime soon, because that means the project is worth 1 trillion, which is even more than Apple, I think. So you should check the total supply, check how much you can afford to invest, check your nuisance bills, and then go into it. So thank you. I will take some questions now.
Okay, thank you, Mr. Mesh, for your delivery. We are so much, some of us are interested in getting into this Bitcoin and all this crypto stuff, but where to start has always been the challenge. And I think this delivery is going a long way to help us in this respect. Well, at this juncture, we will ask for anyone who has a question to put up the hand. Then we will arrange the sequence. Then after that, Mr. Mesh will answer them one after the other. So at this time, we open the floor. You kindly put up the hand, then I will look at it and arrange the sequence. Then Mesh can take it from there. Okay, now I can see only one hand. So, Bukida, please, you can go ahead with your question. Then Mesh will take it. Then maybe we wait for others who are still thinking about yes.
All right. Thank you very much, Mr. Coordinator. I've listed a couple of questions, and if only time you allow, then I'll be able to answer all those questions. So my first question to Mr. Mesh, who did the presentation, is what do one have to consider before buying a crypto? Secondly, which of the exchange platforms is most reliable? I know he has listed a couple of them, but which of the exchange platforms is most reliable? Now, my third question is, how do one, or what are some of the signs one would see in order to avoid the rug pull or the shit coins? Again, my third question, how do you know? He was saying that some coins are hosted on other networks like Binance and crypto.com and others. So how do you know network on which a particular coin is hosted on before you can buy and know whether the coin is being hosted on its own network or it's being hosted by another network? Again, which coin amongst all the coins available on any exchange is the most reliable? Now, there are some of the exchange platforms that will require your bank details. Let's say your, what's the name? Your Visa card, your credit card, and everything. So how safe is your data on such exchange platforms? So I think that will be my last question, if he got my question right.
Okay, thank you for your question, Mr. Mesh. You can take it from here as others also think about yes. But let me put this across. I think we have 10 to 15 minutes for this session so that we can wrap up and then close. Okay, Mr. Mesh.
Yes, so thank you very much. These are very good questions, and I'll try to answer them one by one. So, what to consider before you buy a crypto? So, I talked about the market supply, the supply of the crypto. So, you need to consider that. If that supply is more than 10 billion or 1 trillion, then you should know how much you need to get in order to be able to make profit quickly. So the key word here is to make profit quickly. If you are thinking about holding that coin for a long time, then the quickly is out of question. But if you are looking at making profit sooner, then how quickly? So you consider the total supply and then the market cap. So if the total supply is very huge, then it's not likely to hit $1 if $1 is your target. But if you are looking at making some huge percentage of profits on it, then most likely the total supply is not an issue. If you are hoping to make at least 2%, 3%, 5% profit on that crypto. So that's what you should consider. Which exchange is most reliable? Okay, so the exchange that I talked about here, in my experience or in my opinion, they are all reliable. So Binance.com, Crypto.com, Coinbase, all of these are very reliable. All of these are very reliable. And you can start with Coinbase, which is, I think, the most easiest place to start with. So you just register with Coinbase and you check the coin that you want to buy. And then if it is available on Coinbase, then you can add your debit card and then buy it. You can also use Coinbase as your wallet, but once again, it's a centralized exchange. So you have to think about this as well. But these three are very reliable. What sign to see to avoid rug pull? Yeah, it's a very important question. So first you have to check if that coin has followers. If the coin has less than 1,000 followers, you have to check their social media accounts. You have to check their Telegram page, how many people are there. And then you also have to check if you intend to invest in that coin, you can buy a small percentage. And this one applies to only the decentralized application like Trust Wallet. If you are buying on an exchange, it is most likely that the exchange has done their due diligence and they are aware that the coin will not rug pull, or it's at least a good coin that will stay for a couple of years. Most of the rug pulls happen on decentralized exchange like the Trust Wallet, because over there you can buy into a new project early and they are not listed on an exchange. So before you buy such a coin, you can at least buy, let's say, $5 worth of that coin and then try to sell that coin. If you are not able to sell it, that is 100% rug pull. It will happen because some of these rug pulls, like there was this issue with Squid Game. Somebody used the hype on this Netflix Squid Game and created a coin out of it. And then a lot of people heard about it and they were FOMO, fear of missing out. They rushed into it because the hype was there. And the trick thing that the developers used was that when you buy the coin, you can't sell. And when you can't sell, it shoots the price up because people will be buying and nobody will be selling. The price comes down when people start to sell. But because nobody was selling, the price kept going up and up and up, and people kept buying and buying, and all of a sudden it came down because people couldn't sell. So the developers of that Squid Game scam took away over $2 million worth of investors' money. So yeah, if you are buying on decentralized exchange like Trust Wallet, you need to check this. So that's one sign. So you check their social media, Telegram, make sure they have reliable team before you invest. But if you are buying on an exchange, it's most likely that the exchange has done their homework. Yeah, so you are buying into somewhat reliable project. How to know which network to switch or which network a coin is hosted on, if I'm correct. So over here, this is where the tools come in. So when you go onto an coin market cap or CoinGecko, I don't know if you can still see my screen. Can you still see my screen?
Yes, it's visible.
Okay, good. Yeah, so this is CoinGecko. It has some cryptocurrency prices by market cap. So these are the top 100 coins. Bitcoin, of course, is the leading. Ethereum, second. Binance coin. Tether is a stable coin. And then Solana. So let's check here to see one project if we can find out which network it's hosted on. Yeah, which network to find to um, know the coin, if I'm right. Like you want to buy a coin and you want to know which network that coin is hosted on. So we are checking one coin. Which one? Okay, let's go to Holo. This is the coin that I started to invest in and I failed to take profit. So let's it's one project that I found out very early and I bought. So over here, when you come to like CoinGecko, you can see contract and then you can see Explorer. So when you see Explorer, it says Etherscan or Eth Explorer, which means this one is hosted on Ethereum, on the Ethereum network. So that is one way to find out. And then you can also visit the website and you probably will see which network they are hosted on. So yeah, that is one way. And then there is also the coin market cap. You can go there and then you can check and you will see which networks. So let's check PancakeSwap. I talked about PancakeSwap. Yes, PancakeSwap. So over here you can see BSC scan, which means it's hosted on the Binance Smart Chain. So BNB on the Binance Smart Chain. So contract and then Explorer. Every network has their logo. So when you see it, then you know this network. Which coin is most reliable? Huh. Unfortunately, I can't answer this question, or let me say Bitcoin, or at least some of the coins in the top 100 are most reliable. I'm not a financial advisor, so I can't really tell which coins are most reliable. So you have to do your own research. But of course, Bitcoin, Ethereum, Binance, Solana, these are all real projects. They are Cardano is also a very good coin. $51,000. Yes, that's the price of Bitcoin right now. Yes, yes. So yeah, how safe is your data on the exchange? Um, well, I have been fully into crypto for a year now, and once again, the exchanges that I talked about, they have my data I, once again, not a financial advisor, but my data are safe on these exchanges. So I hope I have answered your questions.
Okay, so Bukuda, can you confirm for us?
Yeah, the questions have been answered, but I want a quick follow-up. Now, when you go to some exchange platform, okay, there are some coins like, let's say, Binance Coin and Binance. What is the difference between the two? Or there's something like crypto.com and crypto coin or something like that. I am beginning to learn, so I don't know much of it. That's why I'm asking a lot of questions. So what is the difference? We have Binance Coin and we have another Binance, and crypto.com has some crypto coin and some other something related to crypto. Can you explain that?
Yeah, I understand your question correctly, right?
Mm,
Yeah, so Binance.com is the company, and
okay.
Binance Coin, that is
Mm,
BNB,
mm,
that is the coin of Binance.
okay.
So it's just like the shares of Binance. That's what is called Binance Coin or BNB. And Crypto.com is the company, and the CRO or the Crypto.com coin is the coin of that company. Is that okay?
Yeah, that's okay.
Yeah.
And
Thank you.
well, I think let me pause it here for now so the others can also ask their questions. Thank you.
Okay,
But
thank you.
in case we want some follow-up questions later, how can we get in touch with you for questions, further questions, and any doubts in our heads to be cleared?
Okay, so I can put my email address. The moderator will put my email address, and then anybody with follow-up questions can get in touch, and then I'll try to answer as much as possible. And then, of course, there is YouTube and Google, which also can help you if you have more questions. If you want to do your own research into crypto, I would suggest YouTube, because that is where I learned most of the things when I got into crypto.
Okay, okay. Thank you very much. Thank you. But
All
are there
right.
any books? Are there any books
Wow.
on crypto or any materials on crypto you can download
Yes,
online and do your own
there
studies
are a lot
about?
of books about crypto. You can search Amazon
Mm-hmm.
for, yeah, books about crypto. I'm sure there are a lot of books about crypto on Amazon, so you
Okay.
can check from there. Yeah.
All right. Thank you.
Thank you.
Okay, thank you, Buguda, for your questions, and then to Mesh for his explanations. I don't know if we have, we will give 5 more minutes to anyone who has any question to put it across. If not, then we will wrap up and then say goodbye to all participants. So let's see if anyone has any question. Also, I'll put a Mesh email in the chat. You can take it down and then also contact him after. All right. it looks everything is clear at this point, and we'll want to take final comments. I don't know if TK is still online. TK, if you are online, you can let us hear from you, because we want final comments from you. Okay. Okay, so it looks we are on our own now. So I will take this opportunity to thank everyone who made time to be part of this seminar and to stay throughout with us. We thank the speakers, Madam Equia Sefako, for her input. At least she helped us a lot to get to understand what is really happening in Ghana and how we can also get involved. Also to Mr. Mesh for his submission. He has opened our minds to how these cryptocurrencies operate and how, if we want to go inside, can do it safely so that we don't run into a loss. We thank all of you once again for your time and for being part of us. It's been a pleasure having you with us. And yeah, so thank you all. We would like to end here, and you enjoy the rest of the evening as well as the rest of the holidays. Thank you, and bye-bye at this point.